Want to improve your trading skills and see more consistent results? Here are 7 essential trading tips that every trader, beginner or experienced, should know. Whether you're in Forex, stocks, crypto, or commodities, these principles can help you trade smarter and more confidently. 1. Always trade with a clear plan. Before you place any trade, define your entry point, target price, and stop loss level. Your trading plan should also include how much of your capital you're risking and what criteria you'll use to exit a position, win or lose. A clear plan helps you stay disciplined and avoid emotional decisions, especially during volatile market moves. 2. Focus on risk management. No matter how confident you are in a trade setup, never risk more than 1 to 2% of your total capital on a single trade. This protects your account from major losses and keeps you in the game long enough to let your edge play out. Use stop-loss orders and avoid doubling down on losing positions. 3. Keep emotions in check. Fear and greed are 2 of the most destructive forces in trading. Many traders panic and exit too early when the market moves against them or get greedy and hold too long, hoping for more profits. Stick to your strategy, accept that losses are part of the game, and don't let short-term results shake your confidence. 4. Stay informed and prepared. Financial markets react quickly to news, economic data, central bank decisions, and global events. Make it a habit to stay updated on the news that affects the assets you trade. Use an economic calendar and prepare for high-impact events that could trigger large price movements. 5. Combine technical and fundamental analysis. Successful traders often blend both forms of analysis. Use technical tools like trend lines, moving averages, support and resistance, and indicators like RSI or MACD to find entry and exit points. At the same time, understand the bigger picture by following earnings reports, interest rates, and geopolitical developments. 6. Start small and scale up. If you're new to trading or testing a new strategy, start with a demo account or small position sizes. Focus on building consistency rather than chasing quick profits. As your confidence and skill improve, you can gradually increase your trade size. 7. Keep a trading journal. Track every trade you make, why you entered, what happened, how you felt, and what you learned. Over time, this helps you identify patterns in your behavior and refine your strategy. A trading journal is one of the most powerful tools for long-term improvement.